Many people thought the crypto markets were going to pump overnight after the Fed announced the lowering of interest rates, but the opposite actually happened. Well, we did get a little bit of a short-term pump, but it didn't last long. And over this weekend, Bitcoin dropped to about $111,000. We saw about 1 billion in Bitcoin long liquidations within 20 minutes, and I believe a total of 1.7 billion of the entire crypto market in the last 24 hours. But there's some positive things happening regarding Chainlink, crypto inflows, and the Senate when it comes to crypto market clarity. One of the most bullish things is crypto investment products drew in 1.9 billion in weekly inflows after Fed rate cut. This is according to CoinShares. So this was the second consecutive week of strong inflows, and the total assets under management in crypto funds reached a year-to-date high of $40.4 billion. And this makes it on track to surpass 2024's $48.6 billion in inflows. Plus, US-based crypto funds led inflows with $1.8 billion. The fact that it was US-based firms is absolutely amazing. Yeah, these are some of the ivory towers and whatnot, but that's okay. This is indicating who is spending money and who is investing. And as we talk about on this channel, hear what I say, but listen to yourself and continue to look at different sources to come up with your own investment thesis. And me personally, the fact that it was US-based companies, this is a good sign. And I'm going to talk about the Senate and Chainlink in a second because it's all regulatory stuff. Also, Bitcoin funds attached the largest share with 977 million in inflows, and Ethereum funds received 772 million. Solana and XRP funds also saw some really nice inflows. So again, this is indicating that these big firms are buying. And generally, they don't flip and trade as fast as, some of us or other entities. So it's good. Now, as far as the Senate, this is important, and then we'll get into Chainlink. Senate Dems say they want to work with their Republican colleagues to move forward quickly on bipartisan crypto market structure. This is good. This means that both parties are going to come together to push out market structure so that we can start to get more innovation in the US. And in the past, this wasn't always the case. So senators urged a bipartisan writing process for effective collaboration and faster progress. This also means less tax dollars being spent because, again, we fund all this stuff. They emphasized starting from a mutual understanding between parties. A new framework released last week outlined several key pillars for the legislation: close gaps in spot market for non-security digital assets, clarify legal status and regulator jurisdiction over digital assets, which again, if it's going to be the SEC or the CFTC regulating, include digital asset issuers in regulation, include digital asset platforms in regulation, prevent illicit finance, prevent corruption and the A word, and ensure fair and effective regulation. So yes, this is good news. Now the final kicker. Well, I guess either way. Anyways, Chainlink General Counsel Ben Sherwin joined CFTC as a digital asset markets subcommittee member, which again is amazing. New members also include executives from Uniswap, Aptos Lab, and BNY Mellon. And Chainlink's Lab General Counsel Ben Sherwin also joined. And some other co-chairs are going to be folks from JP Morgan, Franklin Templeton. And the important thing is that this subcommittee is going to advise the CFTC on crypto market risk, opportunities, and policy. And they really just kind of want to focus on bringing TradFi and DeFi together. And the reason why this is so important is because we have somebody from the crypto industry actively participating in what types of rules we get in the US, which I think is amazing. Comment your thoughts below.